Hope everyone had a fantastic weekend and are ready for an exciting week ahead. A huge week ahead, really, with the US Federal Reserve meeting this week, with the results announced on Wednesday, and a market expecting an immediate rate cut, probably of 25 basis points, and possibly some plans for more to follow. But to start the week, it's a fairly muted event, to be honest with you. Monday has seen very little follow through from the moves in crypto after the weekend spike lower. Bitcoin began the day pretty much unchanged from where it was late Sunday around the 9,500 area, and ETH similarly quiet around the 20860 area. Market didn't seem to know what to do with it on Monday. Really got no action at all. Very little price movement away from the levels I just mentioned. Nothing to report. Just we're looking at the technical picture, and obviously it's the crypto is really struggling a bit at the moment to regain the highs they saw back in June. So it'll be interesting to see how it plays out. But right now, there's no natural catalyst really to take us one way or the other. Just these silly moves we get at the weekend. Moving on to FX. Well, as mentioned, it's all really about the Fed on Wednesday. What will they do? What will they say? How will the market react? All to be seen in less than 48 hours now. This is all against a background of US administration that's also just started to talk about intervening to weaken the US dollar. It should be a very intriguing and interesting period ahead, but potentially quiet, I would imagine, up to the rate announcement on Wednesday. We start the week pretty much unchanged from Friday's close, with the only real mover on the day being sterling, which really did move down to a low against the dollar of 122.20. I'll go into that a little bit more on the technical picture momentarily. But really just all on the fears of a no-deal Brexit. The EU seems very reluctant to renegotiate, and the new Prime Minister, Boris Johnson, seems determined that that deal, what was originally put on the table, must be renegotiated, or they would leave with no deal. Aussie finally broke 69 cents briefly, went down to 68.95. No real bounce on that level, but hovering precariously, should we say. Dollar yen up to 108.85. Euro very much range bound. 111.20 area still kind of holding. We had a late day squeeze up towards 111.50. Market just sitting a little bit short, maybe getting a little bit frustrated. And I think also actually on the day you'll have seen quite a lot of buying of euro against the sterling, which would have pushed euro up a little bit as well. But overall, the big picture for euro has not changed. Euro US equities start the day fairly mixed, with the Dow Jones the only one showing any green on the day. Nasdaq down primarily because of a move lower in Amazon, and European bourses are predominantly green on the day though, with the FTSE 100 rather ironically leading the way up over 2%. What the FX market doesn't like, the equity market does. The logic here is that a weakening of the pound obviously makes UK exports more competitive, which the equity market likes, but I'm not so sure in the big picture that's necessarily going to be a long-term driving case. But that's the reason why the FTSE rallied on the day. By the end of the day, only the Dow Jones still was just up at a small gain. S&P, Nasdaq lower. We had gold up to around about 14.27, up $8 from Friday's close, and the US yield, US 10-year yield, dropped down to 2.06%, just down marginally from Friday's level. So as mentioned, the big mover on the day, or the only mover on the day really, has been sterling. And I've got a weekly chart up here of sterling against the dollar, or better known as cable to us FX traders. The reason I picked up a weekly chart, which obviously is a very big picture chart, probably a time frame which most people listening to this, reading this, are probably not looking at. but I wanted to highlight historically where we are, and we are at some fairly critical levels. 122.20 currently. We have two lines of support down here, as you can see, 128.08, and the low in early 2017, 119.86. Very, very important levels. There is on here, if you actually just go to this this candle here, 3rd of October 2016, there was a flash crash at that point, and the chart data I pick up here only picks it up as a low of I don't know, 120.5 or something like that. You might find some charts that actually have a low down towards 115 or even 110. I discount that. It was a flash crash. If you blinked, you missed it. Call it what you want: system failure, system glitch, illiquid time of day. I'm not putting it down as a line of support because it was so short-lived. So these are really important levels, and we are very, very close to them. So just be very, very careful when trading sterling. There is not much in the way of historical support at below these levels, and obviously all you need is one tweet, one headline, and the market is going to react to it. So just keep that in mind. To the top side, still got this level here, 124.30. I know it's not so clear on a longer term chart. Let me just expand that out a bit. But you can see we went to 124.30 and yeah, it went straight down. So that would probably be my line in the sand for any reversal in a big picture view. And that really does it for today. Expect tomorrow probably more interest in sterling, but expect the rest of the market probably to be fairly quiet as the 2-day Fed meeting begins, with all eyes on Wednesday. Look forward to speaking to you tomorrow. Hope everyone had a good start to the week, and I wish you the best of luck. Cheers.